All right, so this is week 46, I believe, Outlook 2 of 2. So I've added a few pairs here. I'm not going to go over all of them just yet. I'm going to stick to the original GBP USD, NASDAQ 100, USD JPY, and gold for now. But I'm expanding the watch list to look at, I guess, basically the majority or the major pairs of the Forex asset class, and then and then one indice, and then a commodity. All right. So I also got rid of GCAD. I explained after I lost that trade, or after I took that trade, I was like, that was just a random trade I was going to take anyway. It fit, all the model. I was just thinking about it, so I was going to take that trade, but I'm no longer looking at GCAD. This is what I'm pretty much primarily sticking to, would be the major pairs on Forex, NASDAQ of 100, of course, and then gold. So let's go ahead and get into it. On GBP USD, what we are looking at here is still the bullish run, or sorry, the transition from the bullish range, which existed from this low up to this high. And then once we broke that low here, or once we broke this low, once we broke that low here, oh my goodness, pardon me. What's going on here? Bingo. All right, cool. Once we broke that low there, we transitioned from a bullish range into a bearish run. And then we identified a possible opportunity that is currently playing out from this price gap here, which exists from this structural point all the way up to, I guess, this high here. And we're in a bearish run now, expecting price to continue lower, but we want to see if price will solidify this price leg first. And this opportunity was an attempt at saying, hey, this is where the reversal is going to occur to solidify this price leg and establish, I guess, the first leg of this bearish run, in which we would be looking for opportunities inside the premium of this potential bearish price leg. Now, that is the first scenario. The second scenario is this just continues to die. And if this continues to die, then we know where our targets would be, our structural points, our previous structural points. And so because we transitioned from a bullish range into a bearish run, that means that we should now be looking at previous structural points from the previous run, which was a bullish run phase. So we went from a bull run, bull range, bear run. And so every time we get that, we start looking, after we go into a run phase, we look for previous macro liquidity points or structural point targets of the previous run phase to target or to take profit, right? Or to look for targets, essentially. And so that's what we're looking at here. So, but currently we are seeing opportunities. We're in opportunity here from 50% of this daily price gap. It actually, we were in it before this happened. We actually caught the movement up, the bullish price action up here, and then price decided to pull back, and it actually tagged my entry. Luckily, I didn't move it to stop loss. A little more information than what I was willing to share for the outlook, but nonetheless, we're still in this trade on a very solid position. Nice to see that there is confirmation. There is a 50% of the price gap is mitigated. So that's what got this reaction here. So expecting the new day to transition and start moving higher to continue this, to support this price action here, especially based off of the reaction from 50% of the macro price gap. So that's what I'm seeing here on GU. On the NASDAQ 100, I'm actually going to get rid of this. We are still inside of a bullish run. All we did currently is shift the structural point from this low here to this low here, and we're sort of ranging a little bit. It's yet to be seen what actually happens here. We still have, possibility that we transition here and range and don't have enough juice, and we transition from the bullish run phase into the bullish range phase if we take out this low in the form of a break of structure. But if we move higher, then we will continue the bullish run phase, taking out the all-time high. But I will say this, there's always two actions that you have to be aware of when you are looking at a structural point or liquidity point, and that is a break of structure or a liquidity draw. If it's a liquidity draw, potential reversal. If it's a break of structure, continuation. Simple as that. So here we saw price broke the low, but it was in the form of a liquidity draw. So we would expect reversal of the bearish price action here to turn into bullish price action, continuing and aligning with the bullish run here that we see on the macro perspective. So right now, it's in consolidation, so stick to the overall market bias, which is a bullish run, until we get an action occurring at one of the structural or liquidity points. All right, so we're going to scroll on down. USDJPY, okay. So I talked about UJ and said that I was going to stay on the sidelines of this until, we reach the area of interest, and these liquidity points that I had marked out, we're still inside of that bearish range. Price mitigated 100% or close to 100% of this daily price gap here, and then decided to press up to mitigate the first liquidity point. So now what we would be expecting is continuation of that price action, either a pullback to mitigate something else, or continual higher to take out the second liquidity point and then move into area of interest number 1 and see what happens there, or area interest number 2, see what happens there, or does this just go ahead and clear the range? All right, so that's pretty much what we're seeing right now. Until then, I don't want to extrapolate too much. We're just waiting for the next action to occur at the next liquidity point or area of interest. And then gold. Oh man, so I remember I talked about this, and basically I ended up on the wrong side of the market here, miscalculated or misrepresented the action here as a break of structure, which turned the trades that I was looking at into counter trend trades. And the real play was actually based off of this daily price gap, or this macro price gap here, in which it mitigated 100% of it and then gave opportunities inside of the consolidation region here after price, gave this down here. So this was essentially a AOI response play. So you get mitigation, and then you go down to lower time frames to look for entries, and explain that, hey, price, if it mitigates or taps out 100% of this, we're flying, moving towards the all-time high. There is still one possible area in which price could reject the current bullish price action and transition, but you don't want to put way too much faith into that, especially with the momentum picking up, supported by the mitigation of a bullish area of interest in line with the overall macro bullish trend. And then we got accumulation and the press on above that. So don't expect too much from this. If it happens, it happens, but stick to the bias, assuming that this will continue higher to create our next liquidity point after taking out the all-time high. Or more systematically, we want to see what happens at the all-time high. Do we get a liquidity draw, or do we get a break of structure? All right, so that's what we're seeing right now. We got the liquidity draw, not really caring about that. We do see that we have a price gap here. I'm not going to worry too much about it. We're just looking for price current bias to take out this all-time high. All right, that is it, I believe, for the outlook for week 46, 2 of 2. If you have any questions, feel free to reach out. Peace.